Today is Monday, May the 18th, and you can see that the volume was a little bit higher, it looks like. After the open, the market just sort of drifted casually upwards, so everything was at the open. We had a big jump over the close of business on Friday, as you can see by this dashed red line. Of course, everything green, advancers to decliners. She's almost greater than 4 to 1. But when we take a look at our oscillator data, and we've got our oscillator now that is ticked up above the zero line. This is the zero line. I thought it would be really tough for us to get to the zero line, but we shot above it, and it was all because of some positive news about Moderna, who have had some success in early clinical trials with the coronavirus vaccine, so that's all the excuse that the market needed. But now what we want to look at is this high in the market oscillator, the McClellan oscillator, this high, and let's see if the bulls can push it above this value here, which would take it up into the 200 area, which is definitely an overbought area. So let's see if we'll push it up. If it retreats from an area below this 2500 level, this about 150 level, that's an indication that there's downward pressure from the sellers. We looked at the overall volume today. It was much higher than any day in the last 2 weeks and was as high as any day in the last 1, 2, 3, 4, 5 weeks. So that's quite significant. This is what the trading volume looked like in terms of number of shares. There was virtually nothing traded in the stocks which declined, and our summation index. That chart is really hard to see, but our summation index did take a little bit of a tick higher, only slightly higher, which is hard to see in this chart. So this little down jog here may be all she wrote, and we'll see if it continues to move higher. Now, there were some stocks to look at that made some moves that were really in line with the Ichimoku cloud. If we look at the S&P itself, the high value of today that I marked with green, that's the high of this wick, coincided with the Chiku span hitting the 200. So that's important. That means now that high tomorrow is going to mean that the Chiku span is broken through the 200 EMA and would be on its way up to the 200 SMA. Overall, prices moved higher than the 200 EMA. So from that bounce we had at the cloud, which was a perfect bounce, we've had now 2 up days. Looks like it can continue. Apple was up a whopping $8, returning back to its D level in this alternate bat and heading up to its previous high of 327.85. So that stock is really quite strong. Volume was a little bit below the 20-day moving average. Caterpillar took advantage of the thin cloud and pushed up through the cloud, pushed up through the 50 EMA, and so we're going to watch it now. It stopped dead on, closed dead on 50% of this retrace right here from this point. Oops, no, not quite. Where's our values here? From this point, its high of 173 down to where it touched this gap at $89.96, $90, and was a 68% pullback. Now we've moved up to 50%. So this might be the beginning of some kind of a pattern. If we take the cloud out of it and we ask for motive wave to find us the beginning of a harmonic pattern here, and we might be looking at one with the X to A. What kind of a pattern is this? This is what you would call a shark pattern, where it's not one you certainly see very often, but this is the A value. It could have just as easily been this one, but that was a double test at this point here, up to this B value, and now down to 61.8% below the A to B move. So the A to B move retraced down below 61.8%. So that's what we want to take a look at. This is a pattern that calls for a target of 181. So let's keep an eye on that. I'm still short the 130 November calls because I want to be protected with everything that I've got so that if the market pulls back, I know that it's going to be temporary. I think the economy will recover. Don't know if it's going to be the fourth quarter. I suspect it's going to be the first quarter of next year after the election. So I want to be covered into the fall with short calls of the value that I have purchased of the stock. So if my stocks recover all of their value, I'll still have the premium of the calls that I've placed. Home Depot had an amazing day, and tomorrow morning is their earnings. So by the time you get to your desk, they'll have had earnings. This today could have been anticipating strong earnings. Now, the market was up, sure, but obviously a lot of optimism in this stock. It had a range of, it says here 428, but it was greater than that. Yeah, maybe that's all it was, but it was up to as high as 248. Now, this yellow zone that I've marked here is what's called the market maker movement, MMM. So the market makers, by the way that they've priced the at-the-money calls and puts, indicate that tomorrow's volatility could be plus or minus $10. So this is where the stock could go on bad news, down to the 88.7 or up to 256. Now what I did is I purchased 100 shares. I sold 4 weekly 245 puts for over $6. So if the stock were to retrace down to $239, I'd break even. If the stock stays above 245, I get to pocket the $2,500. And I was going to put on some short calls and create a strangle, but I decided not to. So I'm almost fully loaded in Home Depot. If it has a great day, it's going to wipe out my short puts. It's going to take all my covered stock. I'm happy with that because it's a conservative play. And then I'll start to purchase more Home Depot with more covered calls, playing the growth into the summer. FSLY down $1.25. Netflix down slightly. NVIDIA popped up above its Gartley pattern and seems to be taking off. Its volume was higher than the 20-day moving average. U.S. Bank, let's take a look at the banks because overall the banks, Bank of America up 7%, Goldman Sachs, despite probably should have been weak because what's his name? Warren Buffett sold out of Goldman Sachs, but he kept his Bank of America stock. Goldman Sachs was still up almost 6%, as was JP Morgan, as was the XLF in general. U.S. Bank, the fifth largest bank, was up 7.4%, and Citicorp was up 9.2%. So that's pretty significant. So that's good news. When they talk about having negative interest rates as a possibility for the banks to be popping like that, is certainly something you want to be aware of. One stock that suffered today was, and I'm quite surprised, so I'm glad that I got out of my 4 contracts up here, but I did hold on to 3 contracts that have 32 days left, and it looks like, I mean, there's nothing left. They're essentially worth 0 now, so I might as well just hold on to them, but I'll take a $900 loss on those 3 contracts if in a month we can't get up to 290, 300. Let's see, what else do we want to take a look at? TECK is really an infrastructure play in copper, and the type of coal, metallurgical coal, that's used to fire the furnaces that produce steel. That was pretty convincing, almost closed the gap. So when you've got infrastructure stocks moving up like this, banks moving up, NAT, an offshore oil reservoir with their ships, guess not. Somebody asked me what I thought of USO. And I'm not a fan of USO as a way to trade oil. And I sent him, posted in the comments, a link as to why other people think that that's not a great way to invest. USO never takes possession of oil. All they do is buy and sell futures. So you can really get trapped very quickly if a contango, as the situation is now, reverses, and the contango is starting to narrow, where the price for this month's futures and next month's futures is getting narrower. The suggestion instead of playing USO would be to play the oil companies, play BP, play Phillips Petroleum, play Exxon. Intel, just chattering away. Beyond Meat we haven't looked at in a while. In fact, I don't think we ever have, but somebody asked me to look at it a long time ago. And if you put a Fibonacci on that, we've retraced 50% of their high to their low. So do you want to move into that stock? If there's going to be a shortage of beef, maybe it's not a bad idea. Maybe people will now take the opportunity to buy beef alternatives that taste like beef but are not beef. That's all for today. Where are we going tomorrow? The S&P would indicate that we're going higher, and the McClellan oscillator is the one that we want to take a look at, and it is telling us that it's going to try to prove, the bulls are going to try to prove that they can get higher than this point and that they are in control. If we do have a higher value tomorrow, but it's lower than this one, then that will make the following day even more important.